Welcome back to Morning Trade Live. Time for Chart Master. Jenny Horne is standing by and Rick Ducat as well. So Jenny will take us through the fundamentals. Rick Ducat will look at the technicals, checking out those charts. And we have three huge names, defense stocks, that are reporting earnings tomorrow morning. So we start off first, Jenny, taking a look at Lockheed Martin. What do we need to know here?
So yeah, this is an exciting week, of course, outside of even just defense, but for earnings as an entity, I really would say, as we really ramp into some of these defense as well as tech-heavy names. I mean, there's a lot to be excited about, but specific to looking at now defense and Lockheed Martin, I do think it's a really interesting tone, especially following last week when we heard from GE Aerospace kicking off really the industry's earnings last Thursday with really strong long-term outlooks and as well as an earnings beat, hiking its 2025 outlook. So there was a lot to like with GE Aerospace's report. That name has just been at new all-time high after new all-time high. Now Lockheed Martin, RTX, Northrop Grumman report Tuesday with General Dynamics on tap for Wednesday, as well as L3 Harris and Textron on Thursday. So definitely a defense-heavy week. Analysts right now really see momentum, though, in Lockheed specifically. Citi did say in a note earlier today, actually, that momentum across aerospace and defense sector continues to quicken, noting that commercial original equipment production rates are on the rise, while the aftermarket suppliers are busy keeping up current fleets and preparing for what they feel is this potential wave of refurbished work as these airlines are taking these new plane deliveries. So defense services providers are likely to see a reduction in DOGE-related headlines during the second half of this year, as well as right now prime defense contractors are seeing some strong demand from domestic as well as international customers. So NATO allies back in June also did agree to hike their defense spending targets. And we know that under the Big Beautiful Bill, I mean, this is a space that's only set to receive further funding, at least most of these big, of course, commercial names. So all that to be said, I mean, the defense space has been one that's been pretty unstoppable. We haven't necessarily seen the most even type of performance among them, which I think shows the ways in which we could expect to see that government benefit. But Lockheed Martin is the highest rated of all of these names we're talking about today from the sell side, as this name almost exclusively has buy ratings. So that just goes to show the appetite right now among analysts is still very positive on Lockheed.
Okay, I mean, look, I see a lot of the analysts that are very positive. I also saw one report that it could have the lower Q2 earnings. But the big picture here is that these defense stocks generally were names people love to hold, though this chart is not a pretty one per se. Rick, you tell us, what do you think of the technicals?
Yes, perhaps the weakest performer in terms of our chart technicals of the three we're focusing on today. We can see that for about the past half of the 52 trading weeks, Lockheed Martin has been trading sideways. We can see we had a gap down here on earnings, and that gave us two key price levels that have played a role in this price action going forward here. 480 is the main one. That was the high point we had after the gap down, and a repeated ceiling at which price could not really close above or make too much progress beyond. And especially here, where we did start to poke above that level, it ran into further resistance from the purple 252-day exponential moving average. Now we can see that moving average once again is on top of that same resistance line near 480. We also can see that our yellow and orange 21 and 63-day EMAs respectively are all clustered together and moving sideways, speaking really lack of trend direction here, lack of directionality, just kind of sideways grind. But we do have earnings. That could be our new catalyst here. So we can see that momentum, RSI, also exhibiting a very similar triangular shape here. As we say, too, low volatility can often be a precursor to high volatility. So perhaps this has been maybe not the most interesting trading action to look at, but we could be gearing up for, some kind of breakout. This is the kind of situation where you would look for something like that. But anyway, those levels that I mentioned there are the support and resistance to watch out for. We did have those lows as well for the year. We had some spikes to the downside, but for the most part, we stayed pretty consistent.
Yeah, the high was 618, the low was 418, and right now it's at 464, to your point. Year to date, down 5. So we're waiting. I mean, Jenny, you laid out all these names that we have to watch, including Northrop Grumman, General Dynamics, L3, Harris, and more. Let's talk about RTX now, formerly Raytheon. This one reports tomorrow. Tell us about that.
Yeah, so similar in timing, of course, to Lockheed, but this name I still so badly want to call it Raytheon. I do not yet see it as RTX formally, but that is, of course, the ticker in which it trades. And RTX is still expecting some revenue of about 5% from a year ago, of around $20.7 billion. So the consensus mark for earnings also does indicate about a 3% jump, so at least growing from a top and bottom line perspective. Bottom line, though, estimates have slipped about 1% in the last 60 days or so, so showing that right now we are seeing more of a neutral, if not bearish skew from now the sell side. So RTX has been a prominent, of course, U.S. defense contractor, has a pretty impressive surprise history. Its earnings have actually outpaced Zacks consensus estimates in each of the last 4 trailing quarters, the average surprise being over 10%. So can safely say this name does have a history of beating. However, I was seeing a note of more skepticism this morning, specifically on RTX, as right now it does have a lot of backlogs that are tied to some of these contractual terms and the length of various contracts, as well as various programs right now that do involve these long lead time materials. So for that reason alone, RTX into this report, yes, we could see, of course, a government benefit, and we're not expecting any of this defense spending to start to wane per se. But right now, as supply issues and backlogs do still remain a pretty big concern, that's something to consider. And also, actually, this note did mention Lockheed Martin as well for some of that pessimism. So maybe not as buy rated as I was saying previously. But when looking again at all of these names, I think because they report so close to one another, we're going to see management come out and hopefully give proper or at least enthusiastic expectations into the back half of this year. All that to be said, though, it's all going to be, I think, about outlook. It's going to be about guidance and how they're able to frame, how they're competing against one another when they're all, stacked up amongst each other for their reports.
Yeah, I mean, and this chart is so much more impressive. I mean, year to date up 30%, but it's had a nice run up since the lows. Rick, let's take a look at the technicals, please.
Yes, as you said, probably the strongest, most bullish of our 3 charts here today. Raytheon's also the biggest in terms of market cap. It's a little bigger than both of the other 2 stocks put together actually here. But what we can see here, upward channel type shape here between our 2 white dashed lines. We had a notable low point here near 114 that we tested repeatedly. Tested it 2 more times there, so that's a notable supportive level, but we're pretty far beyond that point here. We had more of a ceiling situation in this case here at our green line near about 135. We had a breakdown here. We dipped below it. We recovered at our 21-day EMA in yellow. From there, we tested once again the confluence of those things together and continued in this upward trajectory here. Now, the downside level to be watching for a potential retest, first of all, would be these old highs. Around 148, we did test that shortly after the breakout, but we have a similar confluence to this area right here and here, where we have our moving average and our trend line both lining up with each other. We also have those old highs, so around 148 stands out here going forward. We can see, though, that as momentum increases here, we are pushing into the overbought area. Oftentimes momentum slows down when you head into an event risk situation like earnings, so that also seems rather bullish here in terms of that technical indicator. We can see that our +2 standard deviation channel for potential resistance, our orange line here, comes in just below 159. We can also see here volume lines up fairly closely with our area of interest there near 147, 148. So that's further weight there, but also more volume down here, 135. That matches up with these old highs as well. So a further downside area to consider.
Yeah, and as we look at these defense stocks, some are at records. And Jenny, to your point, some have these overweights and then you see neutrals. It seems to be a lot of push and pull. I mean, Morgan Stanley seems to be more positive, saying Raytheon and Boeing will see more demand and benefit from defense demand overall. So that was a positive one here, and this name here at records. So it's pretty impressive. How about Northrop Grumman? Because that one reports tomorrow as well.
So I will say that, not to end on maybe a bit more of a sour note, but this one, as far as expectations going into this report, is easily the most negative. So this quarter, we are expecting a drop in revenue of about 1.5% year over year to just over $10 billion. A reversal from the almost 7% pace of growth we saw just a year ago. Adjusted earnings per share also expected at around $6.71 a share. So heading into earnings, actually, analysts that cover this company have grown even more increasingly bearish, with revenue estimates seeing about 10 downward revisions over the last 60 days or so. So that's more than half of the analysts that cover this name have gotten more cautious going into this print, if that tells you anything. Northrop has also missed Wall Street's estimates 4 times over the last 2 years. So track record also isn't as strong. But looking again at the performance we've seen of this name, I think maybe perhaps their weakness could be still some of the recipe for success, because positive sentiment in aerospace and defense has been very clear. I mean, we've seen this wide felt by a lot of these names, especially that chart we just looked at in RTX, or like Palantir's chart, for example. However, when looking at Northrop, we have seen about a 6.5% average price gain for the sector over the last month. In this stock's case, it's been up about 4% during the same time. So you could make the argument it's underperformed its industry, at least for the last 30 days or so going into this print. So for that reason, also something to consider, that it has somewhat underperformed. It's not at the same high bar like a GE Aerospace was, but as we know, that's not always the recipe for an earnings like beat or miss either, because we saw a name that was at all-time highs like GE continue to make new all-time highs. This stock, though, needs to revive some of that sentiment, as most of the notes I saw covering this stock ahead of earnings were quite cautious.
Yeah, I mean, look, some of these names have done so incredibly well. Rick, final thoughts here. Take a look at the Northrop Grumman chart here.
Another setup that could be potentially challenging here, because what we had, to backtrack a little bit, was a big gap down on earnings. We had pretty much a notable collapse there that took us to almost the 450 level or so, around that point. Double bottom there, have made a recovery from there, mostly within our white channel here. We had a bit of a false breakout there that we have now, after the channel has progressed more, now it's looking like we're holding on near those closing prices. So around 516, 517, that would be one area to watch. We also have our 21-day EMA near about 509 to the downside here. But like our first chart here, declining momentum here, momentum slowing down into earnings here. Notice as well that we did fill this gap here. 526.45 was that gap level. That's about where price got stuck so far. So a notable resistance point to consider as well. We're kind of stuck in this very narrow range, 516 to about 526 approximately here. You can also see, if you were to look even higher, we also have this double top type price activity near about 544. So there's another notable ceiling area just above if price were to break out. But we can also see here, once we start getting beyond that level we mentioned, 526, 527, the volume starts to drop off. That's where things really start to thin out in terms of the trading activity. If you were to move lower, though, there's another node here. Once you get below the 516 boundary, near like 505 or so, that's where the heavier trading is. So a supportive area, 505 to 510 perhaps.
All right, excellent. Look at some of these defense names that are reporting this week. Thank you both, Jenny Horne and Rick Ducat. Nice to see you both.